What if I told you most people use checking and savings accounts every day, but don't actually understand the difference? That confusion leads to overdraft fees, missed savings opportunities, and poor financial habits. Today, we're breaking it down the right way, simple, clear, and practical. By the end of this training, you'll be able to explain checking versus savings accounts with confidence, recommend the right account based on customer needs, and deliver better financial guidance that builds trust. Let's get into it. Before we compare accounts, you need to understand this. Checking and savings accounts are both deposit accounts, but they serve completely different purposes. Think of it like this. Checking equals money in motion. Savings equals money sitting and growing. If you remember nothing else from this training, remember that. A checking account is designed for one thing: everyday money movement. This is where customers get paid, direct deposit, pay bills, swipe their debit card, withdraw cash, send money through apps like Zelle. This is their financial hub. Now here's where employees add value. You need to clearly explain overdraft options, potential fees, NSF, monthly maintenance, and how to manage the account responsibly. Because let's be real, most complaints come from customers not understanding their checking account. Get it tip. If a customer is using savings like a checking account, that's a coaching moment. Now let's flip it. A savings account is not for spending. It's for building. This is where customers store emergency funds, save for goals, earn interest, APY. And here's the key difference. Savings accounts are designed to slow money down. Less access equals more discipline. Even though Regulation D changed, many banks still limit withdrawals. Why? Because behavior matters. Get it insight. If money is too easy to access, it gets spent. That's why separating checking and savings is powerful. Let's make this simple and crystal clear. Checking equals spend and access. Savings equals store and grow. Here's how you explain it to a member. If you're using it daily, it's checking. If you're trying to grow it, it's savings. That one line alone will make you sound like an expert. Also remember, checking equals high transactions plus possible fees. Savings equals earns interest plus limited access. Most customers don't need one or the other. They need both working together. Now let's talk compliance, but keep it practical. You don't need to sound like a lawyer. You need to sound clear and honest. Key things to remember. Truth in Savings Act. Always disclose APY, fees, and terms. Never sell interest, explain it. Overdraft rules. Customers must opt in. Never assume they understand it. Savings limits. Explain as bank policy, not federal law. Get it rule. If you confuse the customer, you create complaints. Clarity equals compliance. This is where top performers separate themselves. Don't just explain accounts. Diagnose the need. Ask questions like, how often will you use this money? Are you saving for something specific? Then match the solution. Daily use equals checking. Future goals equals savings. Smart setup equals both. Real talk. If you skip discovery, you're guessing. If you ask questions, you're advising. Let's bring it all together. Top performing employees do 4 things. 1. Keep it simple. No banking jargon. 2. Confirm understanding. Does that make sense? 3. Stay compliant. Use disclosures, not assumptions. 4. Build trust. Don't push, guide. Because at the end of the day, we're not just opening accounts. We're helping people manage their money better. If you can confidently explain checking versus savings, you're not just doing transactions anymore. You're building relationships. And that's what separates average bankers from top performers.
This content is for educational purposes only and is not legal, compliance, or financial advice. Please consult your compliance team or a qualified professional before applying any regulatory guidance.